Good morning, everyone. Today is Saturday, October the 8th, around 10 p.m., 11:24 a.m. New York time. And we're gonna go with a weekly technical video day. Um, After doing the whole weekend of day, technically, nothing changed over the last 72 hours, even with the news, the non-farm payroll, and ECB rate decision, proving one more time that wage structures is what matter in the news. So, okay, let's go over the chart a little bit to see if we can get an idea, or we can get some trades. We did some trades over the week. Fortunately enough, I think that we present 4 or 5 trades. We didn't lose any. And we did around 100 and something pips. Remember, our goal always is, we are conservative, but we try to make around 300 or 500 pips every month as an average. And you don't need that many trades in order to get to that levels. Of course, always it's better getting more, but sometimes a service is kind of hard because we always feel responsible with the client's money, and then, well, most of you guys know that what we prefer about it is that we don't know how you leverage the position, how big you are, how small, or you over leverage, and we always keep that in mind. Okay, let's move on to the market. And guys, very simple. The clearest structure in the market is the US dollar index. And as a trader, you always need to identify which one is the clearest structure of the whole market, and then you go from there. With that being said, the US dollar index is the trend, is in favor of the index. In other words, this is the trend, US dollar to the outside. You gotta keep with that trend until the market prove you wrong. Now, according to this count, which been working like a clock, we should be getting another high, a final high, to complete a cycle that started at 72.40 in May. So technically speaking, that new high is gonna complete a 5-way sequence from 72.40 in the dailies and the weekly chart. So with that in mind, this is the two possible scenarios that we see. We see either the dollar is gonna go higher from current levels, or the dollar is gonna get a compressed correction, which is the most likely a scenario due to the fact that wave 2 was very big in time. So we're ready for the worst, which is sharpenings for the next 30 days. But well, this is due, and should happen sooner or later. So technically speaking, the 23.6 of the first of the wave 3 provides support and bounce. Yesterday around noon, the dollar bounced pretty hard, and if it's gonna get compressed, then the dollar should find support around 77.40 before it keeps going higher. But sooner or later, a new high about 79.83 should happen, right? So that's for the dollar, which is the clearest structure of the market. Now, and looking around, let me go for the dollar to the 1 hour, and right here you can have 3 alternatives. The first one is A, B, C completed and become W, or become 4, and then you got 5 ways from the lows. So minimum you should get a basic in the dollar to around 78.94, 79.15, or 79.44 if the dollar is gonna get into the compressed correction. Another scenario is 1, 2, and the dollar is gonna go higher. And the third scenario is that this is part, even though it's too big already, that this is part of the seaway as a flat, and then the dollar is going to keep going low. Nothing else. That at the end, we believe that still the dollar is the trend, and any three ways against the dollar should be bought. Of course, that's why sometimes doubles exact and even triples exact and triangles happen, and don't get surprised to see a triangle in place right here. But these levels that we are around the dollar, we are planning to attack with 3 or 4 different trades when the dollar get to around these areas early Sunday or Monday. Alright? So that's for the dollar. Let's move on now to oil, which is a very significant structure or part of the risk trade that is creating an oil met the minimum target when you print below 75, 71, and it's a very nice structure out of the lows. If oil made the 5 ways, it's gonna be very hard. I can tell you guys, it's gonna be very hard for the dollar to get strong with the bullish oil. So the last chance, and I was thinking about it, that maybe the dollar is gonna go from current levels, is because this B way on oil can represent the 5th way on the dollar, and meaning that this wave right here can be the correction that the oil needs to make, that the dollar needs to make after the first 5 wave from 72.40. So that's why we like to buy the dollar and the open on Sunday. Right? Now, let's go to the individual pairs. On the individual pairs, we're going to start with what we consider being one of the clearest structure in the whole market, is the New Zealand dollar against the US dollar. And this pair is doing a beautiful Elliott Wave structure and fever relationship when we see at the daily chart that we should be, or maybe we ended on Friday, what it looks to be a 1 2 1 2 3 4 5 3 4 structure. Let me point you guys out that this pair should do this before find is a very significant low. We have some orders in this pair over the week. We've been positive, but we're trying to cash the big move, and we've been positive like 100 pick both times and getting back to break even. Now right here there's still a chance, and I would like to see the order at 78.17 to get filled. There's still a chance, and I say that because of this. We're expecting US dollar weakness at the open on Sunday, and we see 5 ways in the short time frame here. So technically we see 6 way. Another high we make 7, and that's gonna make this pair corrective in this correction. About everything, I want you guys to count this. From here, you guys can see 1 2 3 4 5 6 7 swing. You are expecting an impulse from here, being this a 5-way swing. So like the euro, you need another low. Now what happened with it is that right here the count is more clear, because if you label here, you're gonna see how every low look 2.618. so this is 1 2 3 4 5, and because this is 1, this is gonna happen. So we're gonna be active on Sunday. Like I say, we don't want to miss this move, that this move should end around 71.51 area. So we're talking about 700 move, and that's the wave 5 that we're expecting in the dollar. So I want you guys to understand where we stand. We're favoring the dollar for one more high. Alright, this is the proof. From here you got 1 2 3 4 5 6 7. You need 8 and you need a 9-way in order for the impulse to be completed. It should happen around 71.55. On the small time frame within this pair, let me show you the hour so I can show you what it means. You guys can see that from the top, from the bottom, it looks like 1, 2, 3, 4, and 5. We saw right here we were positive, break even. We saw right here we were positive, break even. We see 5 ways coming down here, but maybe this type of flat before going higher. That I wish that that's the scenario. Anyway, we're gonna set it at the open here. Now, another pairs that we would like to cover is the euro dollar right here. The euro dollar is very complex, guys, and I've been telling you guys, yeah, we got a 100-pick trade yesterday, all the stuff, but it's very complex. The trend is to the downside, but the counts, this can be counts in about 3 or 4 ways, and I don't like trading when I see, you see the New Zealand, you can bet your house right there that you got 99% chance that another low in New Zealand, in Aussie, they're gonna take place. Now on the euro, it's not the same scenario. It's very compressed, but as a trader, you gotta keep one thing in mind. Is this: the dollar is ruling, and you got a clear Elliott Wave count in the US dollar index. It's been working, every FIBO, everything's been working. So you gotta count the dollar, assuming that another low is gonna happen before a more significant recovery or weakness in the dollar. So I'm entertaining also the idea that, because technically we are, if you look at the dollar after the new high is gonna see the biggest correction that ever seen since the summer. So with that in mind, that's gonna be in the euro the biggest recovery that ever seen since summer. So the best counts, it looks like it can go either from here, it reached the 23.4, going lower to around 129 area. But the thing is here, because ideally comparing to the dollar, we should be now 1, 2, ending 3, or we should be ending the way with a new low on the euro dollar, which in the euro dollar we should be ending the cycle that started at 149, because 149 is the equal to 72.40 in the dollar. So ideally we should be ending the cycle from 149. The only way is counting in correctives when you got A, B, Z, W, S, and then this become right here, this become A, B, C, W, something like that, A, B, C, W, and that was the count that we were proposing on to Wednesday, and we were expecting another low right here within the wave 5. But if, like I say, if you're gonna count a corrective from here in the daily, you have 1, 2, 3, 4, 5, 6, you got 7 swing. So another low in the dollar, in the euro dollar, is gonna be impulsed for from 45.50 area. So if it's gonna be impulsed, then it needs to be a nest. And then if this needs to be a nest, most likely we are right here, 1, 2, unless you labeling like this. That is the one that I start to like it right now, when we have an irregular B wave, right, wave 2 right here, and then while we end then, I mean, this is the one that allowed the biggest correction on the dollar, on the euro dollar, I'm sorry, is 1, 2, 1, 2, 3, 4, and then that being the case, the euro now should make another high, another low, and that's why yesterday I mentioned the 35 area. Is because look, it's at the 23.6 to end, and then this can be the wave 4, the big wave 4, and then the new low on the dollar is gonna be the end of 140, the 49 from 49.40. But what I don't like about it is that the wave 3 don't even get to the one. I mean, the wave 3 needs, technically what we ending is wave 3 from around 29.18, wave 3 from 49.40, and then the euro after that is gonna do something like this. But that's the issue, that from this point the dollar is gonna explode, because the dollar is gonna make wave 2 or wave B, and it's gonna get into a C around this area. I don't know if you guys follow me. And then from there, the downside on the euro is gonna be minimum, because it's a wave 5. So it's very, very, very confused, the counts on the euro dollar. So, but you have to keep selling it until prove you wrong. So if you take a look at the RSI on the weekly, on the daily, this is it's a three-way move. All you got from the top, it's a three-way move. So, and this is 7 ways. So to be honest with you guys, both the best count that fit the euro dollar, believe it, you guys or no, is this: A, B, C, W, S, A, B, C, W, S, A, B, C, and the US dollar is done. Believe it or no, that's the best count that fit the euro dollar asset. That's what I say. You don't need to trade it. I mean, you don't need to trade it that much, because either the dollar index or the euro, someone is cheating in my view. I have more confidence in the dollar index. That's why you see that we keep selling it, even with a small. We keep selling it is because the counts on the euro dollar is very. I mean, it's very hard. And then, if you take a look at the 4-hour on the euro dollar, right here, and then another alternative is this count which was proposed by DB, very good. 1, 2, 3, 4, a triangle in the middle, and then wave 3 ended here, and that can be the solution, believe it or not, because that's gonna put, in some degrees, they're gonna put it together at the same level, and then this makes sense figure wise, because from here is at the 618, but the 6 again, I mean, too small. I mean, it's very hard. This one called a complete impulse from here to here, and it placed the euro dollar in a wave 4 coming from here. It's very, I mean, my advice, the euro cannot be traded as a swing trade. My advice is this, and this is what we're gonna do. But I went over the euro dollar a little bit deep right here, because you guys understand. I know you guys love the euro dollar, and I can tell you guys there is a bunch of better trade opportunity than the euro dollar on the market. That's all I can tell you. Look, there is nothing wrong, and we're gonna take the short right here. I'm gonna be having the order ready over the weekend, so we can sell it right here, but with this risk, no a single pit about 35.28. because it's very tricky. This is the count. We were right when we say that 35.15 areas can provide support, resistance. We say the 80 of the 15. I was begging yesterday to get fill at 35.40. It didn't happen, but well, we got 100 picks right here. So that's for the euro dollar. Another clear structure that I want to show you is the Aussie dollar. The Aussie dollar retreat very nice for the 30-AO2 on a proposal 1 2 1 2 1 2 3 4 3 4 3. It retreat for the 30-AO2, and like I said, guys, a lot of better trading opportunity than the euro dollar. Look, this is a beauty on Elliott Wave count, perfect, and we should get, like in the New Zealand, we should get another low. Let me show you another one that is acting according to the plan. Is the dollar CAD, which it went a little bit deep. It passed the 30-AO2 by almost right here, past the 30-AO2 by almost 70 picks, but it is bouncing strong. So like I said the other day, 2 alternatives or 3 tentative, but 1 2 3 A B C. This move looks to be a 3-way move to the downside, so that takes the ABC out of it, but it can be 1 2 1 2 and nested. No matter what it is, we're gonna be buying the dollar CAD right here, looking for the 5th way higher like the dollar. The dollar CAD is telling me that it's not likely that the dollar gets into a very deep correction. The only way is if it is the next. If it is the next, we're gonna buy around 102, 101 for the big move to the upside. But anyway, you got in the short time frame, you got 5 ways from the lows, 1 2 3 4 5 ways from the lows, I believe, and you got attack for the minimum scenario being the B way. So let me see in a small time frame. Yeah, you got a 5-way move from the lows right there. Look, you got 1 2 1 2 3 of 3, 4 and a 5 with a divergency here, and then you got it back here. So it's kind of iffy right here, the 5th way, even though we got divergency, but well, still we can get a new high, and that's gonna be enough. But I have no question in my mind that in this pair, minimum in this pair, around 105 106 is gonna be seen before it to go into a kind of complex correction. And finally, on this video, we're gonna take a look at the S&P. The S&P, guys, is the key. I want you guys to understand that S&P can be labeling as 2 scenarios: 1 2 3 4, and I see 5 swing from the top. 1 2 3 4 5. Now I want you guys to take a look at this. How you gonna label a top right here, a bottom right here? I said la diagonal, right? 1 2 3 4 5, or ABC 1 2 3 4 5. All right. Now, wave 3 cannot be the shortest. If you label this leg and you put it here, is alright. In other words, wave 3 is bigger than wave 1. if you label in from here, wave 3 is bigger than wave 1. So technically speaking, you got A, B, C, and then you can see that even this scenario is wave 3 is bigger. So with that in mind, a low can be in place. That's all I can tell you guys. A low can be in place. If the low is in place, then you can see a higher recovery, like oil is showing. A low can be in place, but that doesn't mean that the dollar cannot make one more high, because after 5 waves here, guess what? After 5 waves here, the US dollar can make the S&P on the B wave. That can represent the 5th wave on the dollar. Now, another scenario is 1, 1, 2, 1, and then A, B, and a flat on this nest on the wave, the second nest of the wave 2. That's another scenario. So it has to be one of the other. Now, taking a look at the S&P in a small time frame, we can see this is the third scenario that we are still within the diagonal. You have to keep the count onto this high is taken. Now, taking a look at that, let me take the labels off a bit. You can see that from the lows it goes 1, 2, 3. So it's very important. It's very extremely important, this level in the S&P now. It bounced from the 23.6, so the machines are seeing what I'm seeing. Very hard. A new high on the S&P, that 5 waves, is gonna be very, very significant. Why? Because then we gotta see the recovery, and they say that it goes like this. It needs to be corrective. Otherwise, the counts, that is, I believe, like we say over the weekend, that the euro dollar is following the S&P one after the other. Now, with that in mind, what I say is that another idea, the best case scenario is that the S&P crash on Monday, like this. If the S&P makes a new high, that's gonna complicate the things, because only the flat in the nesting wave 2 is bearish. Otherwise, this is a wave 5, and then it's gonna be 3 waves back to 1300, and then that's gonna complicate the things a little bit. All right. So hope you guys got the overall picture. We're gonna be more detailed tomorrow at the seminar.